Patty Tawadros. Welcome to Money Matters. Today, my co-host is Rich Sichel of Philadelphia Trust Company. It's nice to see you today.
Hi, nice to see you.
So, I know we're going to talk about the financial markets and investing. So, why don't you just give me an overview of what you do?
Sure thing. Yeah, I'm the Chief Investment Officer for a firm in Philadelphia called the Philadelphia Trust Company, very clever name. And we have about $2 billion under management for institutions and individuals. Institutions would be pension plans and endowments, foundations, charitable organizations, things like that. And then individuals, it could be an IRA rollover, somebody retired, rolls over the 401k or 403b, or regular money, because we do have to keep them separate.
Yeah.
It's hands-on money management. It's a little different, I think, a little unique in that we don't use mutual funds. In many ways, it might be easier to use mutual funds, but we think individual stocks are a better way to go. Mutual funds typically are not tax efficient, and they have a lot of fees that are not always totally apparent unless you really dig in. So, we manage money for a fee, but it's a very transparent. You know what it is, you see what it is. It's based on the size of the account. And been in business since 1999. The name the Philadelphia Trust Company was available somehow. It had been used 100 years ago.
100 years old.
Right,
yeah.
And it was available, so it's a nice sound. And we have 20 plus employees, and as the Chief Investment Officer, I sort of, set the policy, the investment policies and things like that. We have a number of other people who manage money. I do hands-on money management, and other people also in the firm. We all work from the same model, so it's sort of one big happy family. And we have analysts who are watching every penny on every earnings report, and traders who are taking care of that. Client support people, so, full complement of people.
Okay, so how long have you been in this business? Is this from the beginning? Beginning of your career?
Not quite. I've been in the business for a while at a couple of firms in Princeton area, a couple in the Philadelphia area, Bryn Mawr Trust prior to Philadelphia Trust in 1999.
So were you always a trader?
I started out as a trader. That was my first job, and learned a lot sort of on the fly. And wanted to be a portfolio manager and worked my way into that. And then as I changed a few jobs here and there, was in charge of certain departments, and then became Chief Investment Officer.
Did you ever work on a floor like they show in the movies where people are screaming and wearing the coats?
That's a good question. There's a lot of glamour to that, but no.
No? Really? Is that real? Is that how it really goes down?
Less so nowadays with all the electronics. It's not quite as exciting as it used to be, but there would be people with a book and writing down what it was and yelling and screaming, and there is less of that. I don't know how there weren't 1,000 mistakes back then, but the trading volume was much, much lower than dramatically lower. The past number of years, trading volume is in the billions of shares, and years ago it would be 5 million shares, 5 million in a day. One stock will do that now.
Wow. I know I've dabbled in stock and trading myself, and I would just buy things I was passionate about: technology, software companies, cosmetics, luxury goods. But that's it. I only bought stuff I really knew about.
Well, even as professionals, they say if you don't understand what the company is doing, maybe stay away from it.
Yeah.
And we did that with a company called Enron many years ago.
Oh, that company?
Yeah. And we were hearing so much about it, and I said, well, what is it? I said, I remember when it was called Northern Natural Gas. This was back in 1999. And we looked at what they did, and we didn't say, hey, we predict that there's a lot of bad things going on here. We just said, we don't get what they're doing. It doesn't make a ton of sense to us, so we're not going to join the crowd and buy it like everybody else did. And our clients are very glad that we didn't.
Yeah, I
So
bet.
sometimes it's just sort of that type of research. We have people who are digging in and checking every penny on the reports, and following every the earnings on all the companies, and so we do our due diligence, see a lot of research, and then we'll make the decisions as to what stocks and what bonds we think our clients should have.
So you remember that, I think it was a movie, I read an article in Vanity Fair, it was about the guy that had Asperger's, and he was able to focus on numbers, and he predicted the collapse of the housing market. Are you familiar with that story?
I've seen a
With that
few of
guy?
those movies, and yeah, I'd say, we try to do it by research and good common sense.
Yeah.
And we didn't predict it, but again, back in '07, the market was still was topping around October of '07, and we looked at financials. We were always looking at all the different industries and thought, geez, financials are about 23% of the market because it had grown so much. And we cut back half. We said, we're not real comfortable with the bigger banks. We stayed with the regional ones, which we felt were safer. And it turned out that was a good decision. A perfect decision would have been to say, gee, the market is going to crash, it's going to be a disaster. But we could feel that something was happening, and so we did cut back pretty dramatically in the financials, and that, and also sold some other stocks and had some cash reserve. And that helped a lot in '08 when the market got killed, the second worst year ever for the market. We were down.
What was the first worst year?
Like
In the 30s?
1930, whatever, yeah,
When
right.
people were jumping out of buildings.
Yeah, so
Yeah.
the windows don't open now, so we're safer. But the market was down 37%. We were down, but nowhere near that amount.
Right.
So, and then the next year the market jumped up, and we went up with it. So, one of the things, again, as a professional, I think you should do is we don't take undue risk, and so when the market gets hit, if you go down, also with us, you're not going to go as much, and then you're not fighting to the next 5 years to get back to where you were.
So I'm sure your clients talked to their friends and told them that they didn't have as big of a hit, or they told them how much of a hit they had in their portfolio, and their friends were taken aback. Did you get new clients after that?
Well, word of mouth is how we get clients.
Yeah, you're very exclusive, right?
Well, we'd like to call it that.
Yeah.
We really don't have salespeople, so that is a little unique. And yes, it's sort of one account at a time, and about half the clients, new ones that we get, come from current clients, their friends or relatives, and then the others would be from networking with attorneys, accountants, whomever you might bump into at an event, and they ask what you do, happy to tell them.
Do you have a cap on what you'll take
Yeah,
under
well,
investments?
We like taking
More?
good accounts. And there are occasions where somebody will come along and we'll talk, and they'll say, well, of course, the market goes up 100 points, you'll sell puts and you'll do this and you'll do that. And we really don't do that. We're long-term investors. And if we think somebody won't be comfortable with our style, we'll say, hey, go open an account somewhere and do that. But we're buying good companies. We're not just sitting there watching and hoping that they go up. But we're very willing to make changes, and we do. But again, it's long-term, it's high quality, and when the market is up or down 200 points, it's an opportunity. But the opposite of, the
Right.
first thing you think of, the market's down a couple hundred, don't sell. We might pick up some more stocks. Market's up, we might want to sell something.
So I know that this show is not going to be aired today.
Right.
So one thing that I heard on the radio this morning was about Apple and their plan to sell the used or refurbished iPhones into India, and India's trying to block them to bring in homegrown technology companies. Have you guys looked into that, and what does that really mean for somebody like Apple?
Well, we're constantly following. Apple's one of our 45 stocks. It's in our core portfolio, but obviously we follow, we look at 1,000 companies. The story will change in a day, but basically I think we're always looking at the long term for a company, and we've had Apple for a number of years. We didn't get in when it was single digits because we need earnings. We don't invest in a company unless they have good earnings.
So no penny stocks for you.
Right. So there are large companies and mid-sized companies, and because we have to have earnings, and then there's only a certain price we'll pay for those earnings, that kept us away from the dot-coms back in 2001 and '02.
So
for a
that's
little
why
while,
you're so stable.
Yeah, a little while we were missing some of that action, and then when the action went there, we were all very glad that we didn't compromise our principles. So, Apple, we think, is still a good story. Basically, everybody, we love all their products, but the investors are sort of not liking Apple. And when it was at $160 a share, people are saying, oh, it's going to go to $260. So again, we try to watch out for those things.
Where has it been recently?
It's under 100 right at this point.
So good time to buy.
And it might be a good time to buy. Again, if you have the conviction to do it, which we wouldn't buy if we don't, and somebody buys a stock at 95 and it goes down to 89, that might not be a problem. You're in it for the long term, and maybe you want to buy more. The time that you really should get out of something is when you hear that the chief financial officer left in the middle of the night, or there's an issue.
So there's a rush to get out the door in the morning that day.
And the company is saying, well, it'll all be okay. You might not want to be in that company, but Apple is not going to grow the way it did. They may still come along with the next great thing, but in the meantime, it's trading at a low price to earnings, pays a dividend, and it's still a very good company.
I've heard that the watch isn't doing as well as they expected. Do you hear of things like that? I know that you're looking at financials, but...
Right. Our analysts could tell you how many watches they've sold. I don't know that, but I'm looking at the bigger picture. And iPhone sales are down. They will be coming out with a 7 in, I guess, around Christmas time. And, the last couple haven't been game changers. Maybe that will be. So, again, it's very product driven. And lately, some of the products have lost some of their luster. But
I think there's so many competitors. When the Apple Watch came out, I really wanted it. I love new technology, and especially wearable devices. I'm always obsessed with fitness and what I've done and tracking it. And then I looked at the battery life, and that was a deal breaker for me. And I ended up getting a smartwatch like that had a 3-week battery life. And I see the pictures, and I walk by the Apple store in the city all the time, and I think, oh, I'm going to get it. And then I hold back.
It looks cool.
It's so pretty.
Yeah. One of the problems, obviously, with the phone, half the time you're worried about your battery life. So there are some very good things that might be coming along.
Oh, really?
Hey, don't worry about the battery anymore. Or, hey, you dropped it on cement. Well, it'll bounce and you'll catch it or whatever.
That would be a fantasy.
It's not going to crack. So, and that's not well, in some ways, the battery thing would be somewhat game-changing technology.
We have someone like Samsung. They have that phone where you can pour liquid on it. That's in the TV commercials.
They're a good competitor.
Yeah.
Right.
I know. I have friends that say, maybe next time it'll be a Samsung. And I think, really? I don't know how you can leave everything they get you. You have your iPhone, your iPad, your laptop, and your email, and everything.
I'm one of those, yes.
Yeah, and iTunes, and you're in. There's no getting out.
Yeah, and that's one of the things that makes it a great company.
Yeah.
They really, and they typically haven't invented what it was. They didn't invent the phone, they didn't invent the music. There was a company called iRiver, which came out with an MP3 player way back. And
I had one of those.
I have one too. It's a collector's item.
Do you still have, right?
And I remember it took me, I couldn't figure out how to get a CD to work, to make it work.
It took a lot of time.
iTunes came along, wow, this is easy. So they take concepts and make them much more user-friendly, and as you say, your iPad and everything else, and it just sort of becomes a way of life.
That's my whole business, is about making websites and interactions user-friendly, and it's fun. It's fun to solve problems, and I just think what that would be like to work at a company like Apple or Samsung, where they have entire departments focused on, you sit around all day and brainstorm how to make the user experience better.
Yeah, I always think I really love what I do. It's never a dull moment, and things like that sounds really great.
Yeah.
Except I'm not sure that I'd be able to figure that out, how to do that. So that somebody comes to you and says, I need a website, or what would be your kind of clients that you have that come to you?
We have a lot of B2B clients, not as much business to consumer, although we love doing that as well. But it generally is that they come to us, and a big shift in the last year is getting into the compliance with Google. So if you want your website to rank in Google, and we're at a critical point where people have crossed over from browsing. So it used to be that most people used their computer, and some people browsed on their iPhone or their smartphone or their BlackBerry back in the day. And now we've crossed over to the point where more than 51%, and in some cases 70% plus, of people, depending on the audience, they're browsing on their mobile device.
Right.
And what that means, if your website is not responsive, meaning that it'll scale to fit any platform, I'm sure you've seen them where they collapse down and you're navigating a long page.
It's still annoying sometimes when I look at something and wait a minute, what happened? Is it me
you're
or what?
sliding it this way and that way.
Yeah.
Yeah, so if your website doesn't collapse to fit the screen that it's on, you're not going to rank in the search engine results. So if you're somebody big like a J. Crew, they don't care. Only recently, I think, did they really start to become mobile friendly. They're still gonna you're going to go to jcrew.com. Their demographic knows who their website is. But if you're searching for somebody, you know, if you're searching for a pet store, I often am driving somewhere and realize I ran out of pet food. And I think, oh, is there a pet store near me? And I might use Siri on the phone and ask for a pet store near me, or type. And if that particular pet store, like a small mom and pop shop, doesn't have a responsive website, they're not going to come up in my rankings. All the big ones will ahead of it.
Or if you have a bad experience with it, it'll be, I'll never do that again.
Yeah.
I'll try somebody else.
Yeah, so that's a big move, is that if your website is not mobile friendly, and that's in any industry, we do a lot of law firms, you need to convert it. And that's where we come in. So we'll take what they have, we'll make it better, we'll implement new tools that make the user experience better, and we make their websites mobile friendly.
Do you do apps also?
We can do apps, but you know, unless
What's
you're...
the pros and cons of that? You
It
know,
depends
I'm app
what
crazy.
your thing is.
I hear about an app
So-
and I put it on my phone and then I think,
Will you pay
why
for
do I
them?
have that? Typically they're free
Yeah, but would you pay?
for the
Depending
right one.
on what it is.
Yeah.
I bought a weather app for $4.99 and I hate it. It never can find me. And it's
Really?
supposed to tell you when it's going to rain, send you an alert, and it doesn't work the way I expected.
Mm-hmm.
But I think the difference between an app and a website is it depends what you're using it for. What's a big app that you actually use regularly?
Well, the news apps and sports and politics. And I mean, I could do the website, but I do the apps because I just, you know,
They're
do the
easier.
press. Yeah.
Yeah, so I think there's some pros and cons. If you have a responsive website, you can't have a fixed spot on somebody's screen. You have to ask them to add it to their home screen. I don't know if you've ever seen that in a website. So it'll say add to home screen. So then all they do is basically get a bookmark to your website.
Right.
So somebody that used to do that, I don't know if they fixed it yet, is Lululemon Athletica. I'm sure you know about that company.
Yeah.
So they didn't have a mobile app, so you couldn't go there and browse for their clothes on their app. You had to add it to your home screen on your phone, basically adding a bookmark, and then you would take you to the website. So none of the data is on your phone. If they had an app, they might push all the new clothes down to your website, to your phone, to your mobile device, and when you're in the app and you're browsing, you're looking at stuff locally as opposed to necessarily pulling it real time from their servers. So it's just a matter of convenience. Sometimes an entire solution will be an app as opposed to a website.
Uber, right?
Yeah.
I love that app.
You can go to their website. They have some information on there, but you're not requesting a ride from there. You're requesting it because it's implementing the GPS on your phone. So, yeah, that's sort of the pros and cons. It's really, not everybody needs an app. Some people get sold apps because an app developer wants to get a paycheck as opposed to it's the solution that's going to solve the problem. And then when you have an app, you have to have an app for the iPhone. You have to have an app for Android devices. You have to have one for each platform, and it becomes really expensive.
Not BlackBerry.
Yeah, not anymore. So you'd have to have...
It used to be the cool one.
Yeah. You have to have a website. You have to have a mobile app for iPhone or a mobile app for Android. And now your bill has tripled. Where Uber, they're just an app. Right. So it's really easy for them to invest all their technology into the app and then have a limited presence on their website. So yeah, we help people make decisions in that way too. We had a law firm that was a client and they wanted an app. And I said, what do you want an app for? What do you need an app for? Like, sell me on it, because now you're talking about managing 3 to 4 platforms and spending $60,000 for no reason. So it's also about making good money decisions.
So website is more, just as efficient, maybe more so, and
for a law firm,
more cost effective.
For that particular law firm, it was.
Well, I should have mentioned when I said sports and politics, business also.
Business, yeah.
Always.
Always, yeah.
Right.
But I like companies to not waste money, because my relationship with them, I want it to be long-term, just like you want yours to be long-term, so you're not trying to get fees and stuff up front. You're trying to build trust and have them, I want them to understand that I have their best interests at heart, so I'm not going to oversell them.
Yep, I can relate to that.
Yeah,
Sure.
So as a result, I've had clients for 10 plus years, which is, it's good.
How do people find you?
I think I'm like you. I'm exclusive. We don't advertise much at all. I'm on the board of Center City Proprietors Association, so I sponsor their events from time to time just because it's an organization I really like. But other than that, I don't advertise. So it's word of mouth. And I would say that we're at capacity, but always willing to grow for the right project, the right client. So it's it's good. It's been 13 years of relationship building to get to that point where advertising isn't important to me.
That's great.
Yeah.
One at a time.
Yeah.
I always tell people, say Merrill Lynch or Vanguard opens more accounts in 2 minutes than we do in a year. That's fine with us.
Yeah.
One at a time. We know who they are. We can personalize everything, client service. So, that's our comfort.
Yeah, being in the business I'm in, I'm always thinking about how to grow a company and how to scale a company. And I think about a company like mine or a company like yours, people are buying for a personal relationship.
Mm-hmm.
They're coming to you because they like you, they like the experience, they like knowing who their partners are.
Mm-hmm.
But you go to someone like Vanguard and they have a rotating call system, and I invest with Vanguard. I'm not going to put them down, they're amazing. But other things you buy when you're doing wealth management, you want to know the person that's managing your wealth.
Yeah, I definitely agree with that.
Yeah.
And I think client service is a big part of it. The results are very important, and then are you there for them, for their family? And we are.
There was a great TV commercial, I don't know who it is, but they talk about when the market's down, is your advisor there for you?
Oh,
Yeah.
okay.
And I think that's an important part of it. So let me ask you a viewer question.
Sure.
This is coming from Trent Marco and Wayne. He asks, what are some good sectors to invest in when interest rates go up?
Good question. And one of these days interest rates will go up, but they still haven't. Financials, definitely banks, because banks make a good bit of their money from taking deposit and then making a loan. And obviously, if they're taking a deposit at 1%, loaning it at 3%, there's 200 basis points in there. It's a nice spread. But rates go up, the loan sort of goes up a little more. The savings rate will too. But again, you get more spread in there, so they make more money.
So invest in banks.
So banks, when interest rates are going up, and banks can do well in other times too. And then the others, typically if rates are going up, it means the economy is good. So, industrials like a DuPont or tech, obviously, Microchip and Apple and Google, which is called Alphabet. So those are
What about automotive?
Automotive is very, very cyclical. The low interest rates have been very good because you see these 0.9 and 1.9 rates. It's almost free money. So,
But what I meant is I heard a report that said when there's a lot of development and growth in cities, truck sales are the leading automotive sale, like Ford, the big trucks.
Yeah, and the companies make a lot of money. They make much more on SUVs and pickup trucks than they do on smaller cars. So it's been more a case of low energy prices, low prices at the pump, that these companies have done much, much better because the profit margins are big. The bigger the vehicle, the bigger the profit margin.
Yeah. I'm not going to complain because it's pretty great that the gas is down to $2 and change, but it's so shocking that it was $4 something just, like a year and a half ago?
It's been terrific as a consumer. Obviously, it has impacted the economy because we are an energy producer these days, where even a decade ago we were not. So it has created unemployment in some areas of the country. And too high is not good when oil is $140 a barrel, and 20-something is not good, and it's up about 45 at this moment. And so, and if you go into New Jersey and get gas, it was about $1.50. Now
and
it's
someone
about
pumps it for you.
Right, so cross the bridge and save some money. They have the lowest taxes for whatever reason
New Jersey?
in the country on gasoline
and high
on
in regular
high
life,
on everything else. But so the typical consumer, you went in and paid $82 to fill your car, and now you're paying $38. There's some money left over there that you can do something with. So it is good for the consumer.
So I have to go back to the viewer question, do you watch 60 Minutes?
On occasion.
Did you see this past Sunday night? They had a program, and it was about these young startup guys I think they were from Ireland, and they're in California now, and I don't remember the name of their company, but they're trying to disrupt the financial market. Do you know what I'm talking about?
I didn't see that, and I don't know what they're disrupting, but
they're changing the banking process, and it had to do with getting
Bitcoin people, maybe. But
no, it wasn't the Bitcoin people. These guys, they're backed by all these huge organizations. I think it had something to do with. They said that they wanted to take credit cards online. Oh, Stripe. It's from the people that take credit cards through online transactions. And I used Square Up, which is a website building tool for some low-budget clients, especially people when I'm trying to help out friends.
Right.
They want a website. I'm like, I'm not building you a free site, but you can use this great service for a 3 or 4 page site. And if they're trying to sell online, they use a credit card merchant called Stripe. Super easy to set up. And I don't know if these were the Stripe guys or Stripe is one of the products in their...
Yeah. Well, everything's always evolving, the financial industry, and thanks to technology, which is unbelievable. As they say, you know, with the technology in your phone there's more there than there was on the computers that sent people to the moon in 1969.
Yeah.
So it's pretty incredible. So it keeps evolving, and the companies that can change with it or buy those companies to get the technology, they're the ones that will survive. And so there's so many things that we look at as a professional investor that it's not just, wow, this is good, we like their story, that's great, we want to know what they're earning, what their dividend is, and how competition is going. And Nike is an example. It's a company we like a lot. A lot of those similar companies to Nike have fallen by the wayside. A lot of retailers have fallen by the wayside. And the ones that innovate are the ones that will be there for you over the long term. And it's more apparent, I think, sometimes with retailing, because you go to a mall and say, hey, this place just bought Chapter 11, but here's a place that people are still going, and Lululemon is one of them that you mentioned. It's been pretty volatile, but good growth company.
It is pretty neat. I don't know if you've seen in Center City, they had a collapse in their ceiling, and they moved a couple times. Now they're in their permanent spot on Walnut Street with the gold doors.
And a good high price spot.
Yeah, right next to the other athletic company, Phila.
Right.
Which I think that's so odd. How can they be side by side with their competitor? I don't know how that's going to go.
Well, retailing is tough.
Yeah.
And the strong one will survive.
All right, well, next week, our guest is going to be Francis P. Sutter. He's a cardiac surgeon, and what's really interesting, he's going to talk about robotic surgery, which are things that we only see on TV. So we hope you'll join us next week. Thank you for joining us today.